Hello and welcome back to Cryptocurrency Trading, Mastering Scalp Trading Strategies by Wealthy Education. In this video, we'll talk about bullish and bearish Harami candlesticks. So Harami means pregnant lady in Japanese. It is a two candlestick pattern, and essentially it is a big candlestick followed by a little one. There's a gap. So it looks something like that. So it's literally the exact opposite of an engulfing candlestick, or the first candlestick engulfs the second one. And the idea is that if you are in a downtrend, for example, and this is a negative candlestick, and the next candlestick is a gap higher, it can be negative, it can be positive, it doesn't matter. But what you are seeing is a lack of downward momentum and a potential turnaround. If it's in an uptrend, then it's just simply the same thing but opposite. You're in an uptrend, then all of a sudden you see a quiet candlestick. Generally, you sell the top or bottom of the mother candlestick. So in this downtrend, you would be a buyer on a break above that. In an uptrend, you'd be a seller on a break below it. Stop loss goes on the other side of the two candle pattern. Now, again, this is Tesla on the daily chart. And I'm only using this for illustrated purposes. I'll jump over to crypto here in a second. But notice how we're in a downtrend. And then this little candlestick here, we got a gap and it just kind of sat there. And once we broke above the mother's head, we took off towards resistance. The stop loss would have gone back here. You would have had to been a little bit patient, but you would have made your money in Tesla. Now, the reason I started there and not in crypto is because, as I'm sure you can guess, one of the big problems you're going to have is crypto doesn't shut down. So there is no such thing as an opening gap. And that means that this pattern doesn't actually happen. Not the traditional pattern. However, I would postulate this pattern counts. And the reason is this is a much bigger candlestick than this one, and it's clearly run out of momentum. If you don't like that one, you can say this one counts. More importantly, they occurred at this resistance. So this is one of those things. There's going to be a little bit of artistry involved, but what you're noticing more than anything else is momentum is running out. So, for example, we dropped here during this day and then got this short little candlestick. And once we broke above the top of that, it was a complete turnaround. Let's go ahead and move towards scalping charts, because that, of course, was a daily chart. I would suggest that before we go any further, to understand that each candlestick tells you a story, and it's less about the perfect shape of the candlestick and more about paying attention to what could be happening. So this isn't necessarily what I would consider a bearish Harami, but it does say the same thing. It says we're running out of momentum. And remember, everybody who bought during this candlestick is losing money, so they have to eventually sell their position. So here is a Harami here. A lot of volume here, and then all of a sudden it just stopped. Positive candlestick, you take a break above that, stop loss above there, you can go to there. Pretty straightforward. Let me go ahead and pull out another chart here. So Ethereum, kind of the same thing here. That's a ridiculous one though. That's because of the size of that candlestick. You don't want to fight, you don't want to swim upstream against something like that. You do have to use a little bit of common sense. Here's one that would be interesting to take. A break above that does lead to a much bigger move, although there was a weird wick here. Here is a bearish Harami. Again, I'd like to see that a little bit smaller, but it gives you an idea. Let's go ahead and take a look at something else, like chain link here. Now, this would not be Harami, even though it's smaller in that one, only because they're so similar in size. Again, you have to use a little bit of common sense. Here's one here that I think would qualify. Like the Ethereum one, that is such a nasty one that I don't know why you would try to swim back up that stream. Um, Here's one. You take a break of the highs. There's an engulfing, bearish engulfing. You could call this a bearish Harami because it is less than half the size of the candlestick. Has half the size of the body in front of it. And the body really does matter more than the wicks. Here's one that I suppose you could call as well. So then the question is, it's right there. Yes, there is price action to suggest that we might see the port there. So I'll zoom back in. And there you go. It all ties together. So I'll run through some examples of how you would trade this, like other ways you could get involved in these markets, and how, some of these Haramis would work out in real time in the next video. Hello and welcome back to Cryptocurrency Trading Mastering Scalp Trading Strategies by Wealth Education. In this video, I'll show some examples of using our modified Harami pattern in the cryptocurrency market. So the first thing I'll do is I'll go down to a scalping chart, a more reasonable time frame. And this is Bitcoin. And as I alluded to in the last video, I prefer the body over the wick of the candlestick. And in fact, this is actually what they call a hammer, so it could go both ways. That would be a buy signal. I'll find something that I can't call a hammer, and we go from there. This is a very interesting Harami because that's a very, very tiny body for the candlestick. So your stop loss would go underneath here, and your entry would be on a break of the mother candlestick. So somewhere around here, you got tagged in. Now, the question, of course, is, are there other things that could have led to an entry? Well, volume was, it was okay. Not a lot going on there, but you can see that the moving average, and this will be the 9. Go ahead and put another one on. So you can see that we crossed there and we had this big impulsive candlestick. You could have gotten out at the cross here. You could have drawn a trend line once we started channeling. Either way, you could definitely see the entry. I mean, you never came anywhere near worrying about your stop loss. This is Harami here, and I find this particularly interesting because there's such obvious resistance. Now, the problem that you would run into with this trade, why it may not have been a great trade, is because your first level of support, it made it about a 1-to-1 trade, maybe even a little less than 1-to-1. Sometimes that happens in scalping. You can do it. You don't want to do much of it. Let's put it that way. You want to make sure that you're right. Your good trade makes up for a lot of bad trades. So here's one that actually just took off. So you can see we fell again, got this massive candlestick, and then got this bearish Harami almost immediately. So, where does it go? You would have to really start to zoom out. And you can see exactly where we fell right back down to that area again. So that was a nasty little move. on high volume that you could have taken advantage of. Let's go ahead and find another chart here. Finance. That's actually Hammer, and we will talk about that. Actually, it's the next video. Here is a Harami. It could also be called what is known as a shooting star, which is a couple of videos down the road, but it is essentially the same thing in that scenario. You could call this a Harami, this a Harami, this a Harami. We did not break until we got here, and we did go to resistance. That's about a 1-to-1 trade, not my favorite, but you can do them. Again, you want a risk to reward that kind of works out. Like if you're going to risk $1, you want to make 2 or 3. Here's one right here. Add support. Notice that the candlestick broke above the 20 moving average, and then we got a cross shortly after, confirming the total breakout. We could also take a look at the MACD, and you can see we are rising. We actually crossed all the way over here, so it's just a continuation of finding momentum on the way back up. And let's do Avalanche. Let's see. Yeah, hide these moving averages. Make it a little easier for me to do my job here. This is a shooting star / Harami. Again, it's kind of the same candlestick in this particular argument. If you look at it that way, it's happening right at the 61.8% fib. So you could make an argument for that, although I would call that a shooting star more than a Harami. In that particular scenario, you could go either way. The beauty of it is both tell you the same thing. Like this is a hammer, but it's also an Harami. Here's one here. And I like this one because we're obviously approaching an area of resistance. You can see where the market struggled to get above there. And the risks and rewards, okay. You break down below this, you're not going to take a huge loss. You do have to keep an eye on this area. But once you break down through there, your next target is down here. And you can see we just kind of walked right along it, retested, and then fell. So pretty straightforward there. Also, you have the MACD crossing right about the same time you break down through the mother candlestick. So as I said previously, the next video is going to feature something called a hammer and also a hanging man candlestick.